Amazon is one of the strongest companies I have yet come to see visually represented on a technical graph. Here are the technical muscles of this American Belgian blue. Here we are, ready to get this 1 week US stocks challenge going. And to those of you who don't know it, it was postponed for a full week as I caught a nasty food poisoning that cursed me to be bedridden for 6 straight days. I even started last week off by collapsing on the hallway floor so that my wife had to call 999. Typically, I don't mind being sick every now and then, as minor diseases can be quite like a mini vacation where you can legitimately just lay around and watch series all day. In this case, however, I was too drained out of energy to focus on anything at all, yet energetic enough to be bored out of my mind from just laying around. This here best depicts Saturday the 5th to Thursday the 10th. But enough about that, let's move on to Amazon. But before that, do note that nothing in this episode is financial advice. Everything I say is my own opinions only. And if you appreciate this episode and if it helps you better understand the technical status of Amazon, then please like and subscribe. I spent a lot of time looking at this one and I found several things I know you will like. So without further ado, let's get down to business. Now, when we look at Amazon on the weekly chart, we can see that it has been in somewhat of a stalemate for 5 months now. First of all, this is nothing surprising at all, as the stock has gone up by 100% in just 4 months. This may not sound much on its own given the ludicrous stock price run-ups we have all experienced in a wide variety of stocks this year, but there is a clear difference between high-hope newcomers and top-of-the-world established companies like Amazon. For it's easier to go from little to something, to get a tiny piece of the market cookie, than it is to go from world-leading to empirely. For remember this, for despite being the biggest online retailer already, since March this year, Amazon has grown as much in value as it has in the last 20 years leading up to that point. That's certainly not a negligent feat. In fact, Amazon's trend is so strong that it hasn't gone through the traditional market phases. Since its 2001 IT crash bottom, it has been flying high in a consistent markup phase and has generated an average of 40% per year, or 630 times your investment. In this sense, we will never look to short this company. Neither do these types of equities work at all when it comes to the RSI strategies, as these require the 4 market cycles to be effective at all. Hence, using the RSI strategies in companies like these is a futile endeavor. We can at best identify a lower bullish red line, which of course can be incredibly valuable still. Now, what do we have here really? Well, to me it looks perfectly obvious. We have a continuation pattern in the making, one that may pave the way for a strong leg up. First of all, the RSI, which is in a strong bullish channel and where this continuation formation simply gives the buyers a chance to catch their breath before continuing their sprint. What makes it particularly healthy is the fact that it found its support and bottom at around the green RSI 50 line. From a continuation point of view, this is one of the ideal situations. And these spots in turn are in fact the simplest and most reliable combination for long positions and tend to come at a very low risk in relation to payoffs and frequency of payoffs. And secondly, when the price breaks above the Bollinger Band and then proceeds to move sideways, it is a statistical indication of more to come. This presumed, however, that the price does not break below its adjoiningly formed support level. In this case, the negative breaking point would be if the price were to break below this local bottom at around $2,900. And this little trinity of sideways priced action, a strong yet recharging RSI, and the Bollinger Band criterion together paint a nice and clear picture. But most importantly, they paint an inherently bullish picture. If we go back to the monthly chart, and if we look at it from the logarithmic perspective, we can easily draw up both a support and a resistance line, both dating back to 2007 and 2008 respectively. These each have 3 touches which validate them, and all in all the channel does offer a clear and strong resistance at around $4,000 within a near future. Target-wise from this formation, I'd expect us to once again hit the upper level. This in turn would make good technical sense and would amount to a short-term 30% upside from this continuation formation. From a mid-term perspective, we can draw another line, still on the monthly log chart, which connects the earlier resistance points in 2008, 9, 10 and 11. Here's an ultimate target prediction of mine, one which in fact is quite likely, so remember where you heard this. If we were to break above this logarithmic resistance line, it would be the first time ever. And breaking these are a big deal, one which could signal a final market blow-off. In such case, the next log resistance line is the one to keep an eye on. In this case, we're talking roughly in the $5,500 to $7,400 range if it were to occur sometime during 2021. But even if the fun may be over for most companies in most markets and in most countries upon the next crash, I'm not certain Amazon will join in on that collective bloodbath. I can say one thing right away: I will not short this company. Not because it won't still be subject to any temporary market crashes, but because its inherent strength makes it a poor candidate for such actions. There are much better companies and sectors to focus on when it comes to riding the bears. For when the ship is bigger than the ocean it sails on, you might just find it tricky to sink. That was all for now. Thank you and goodbye.